The SEC has postponed its decision on the ARC Bitcoin ETF, marking another setback in the prolonged effort to allow direct trading of crypto assets on traditional U.S. markets. Joining us now is Jay Clayton, former chair of the SEC and a CNBC contributor. You know, I was trying to, been on vacation, so I'm like a little woozy, but I'm trying to remember the last politicians we had on, and they had all kinds of plans to pass all kinds of stuff, and there was one from the one party, one from the other party. They were together. They were writing stuff. Anything going on? Anything happen? This isn't going to happen again. It's just more of the same, Jay.
Well, look, the SEC postponed the decision, but they are seeking public comment. And the landscape for Bitcoin and retail access to Bitcoin has definitely changed. And let's just look at where we are today. When I was SEC chair, was very skeptical of the Bitcoin trading markets. And whether you believe Bitcoin is going to go to whatever or dry up and go away, I think that's no longer the question. You had Russ Benham on. He was talking about it's clearly a commodity. It should be regulated like a commodity. We have large retail participation around the globe, and people want access to it. Now, what do we have? We have very credible financial institutions who have fiduciary duties of best interest to their customers, who are saying, we want to deliver this product, and we can do so consistent with those obligations. Last thing you have is you actually have the futures ETF trading, which we all know is an inefficient product. So my assessment, looking at all of that, is let's get some public comment, and then let's move on and have a spot Bitcoin ETF.
So is it a stretch to say, okay, there are securities like equities, and then there were places like First Jersey or Stratton Oakmont, or take your pick of these fly-by-night bucket shop operations, and that's akin to SBF and maybe
look, the crypto markets,
FTX.
The crypto markets, okay, were rife with fraud,
but not crypto itself.
Crypto's a technology. Okay, it is a technology.
People still conflate the two and argue that crypto itself is a Ponzi scheme.
Right, but clearly distributed ledger technology is a technology that people have found efficiency in. Go back to the legislative efforts. We've talked about stablecoin before. There is little doubt that stablecoin is a very efficient way to transfer dollars around the globe. Can it be done in compliance with our AML, KYC, and other, what I would say is macroprudential and national security laws? Yes, it can be. It can be done. We're talking about a digital dollar. So is the technology a good technology for some uses? Pretty clearly, yes.
Well, then, what's the problem then? Or you don't think it's going to be a problem much longer? Do you think Gary Gensler believes that what you just said?
Well, we did, in this administration, approve a futures ETF for Bitcoin. So, that's already there.
But if that's inefficient and actually part of the problem, then why the dragging of the feet on the spot?
Well, yeah. Look. Anything like this, where you've had a history of really bad behavior, you do want to move slowly, and you can see that in Congress. And look, we live in a very political. I would say what percentage of this program actually touches on politics? A fair amount. Like, what is the political response to various things going to be? Yeah. When you have a fraudster like Sam Bankman-Fried, who was deeply intertwined in politics, people will want to take a pause.
Right. So when we decide to try and sing a song together, the only one we can sing is probably the Star Spangled Banner, because she's so, from such a different generation. Should she be? She's got plenty of time. She's young. Should she be thinking about buying 4% bonds, or would you recommend she buy some Bitcoin, Jay? I mean, what would you tell Kelly Evans to do at this point?
What would I tell Kelly Evans? Diversify. That's what I would say. Diversify.
I'm kidding when I say don't buy a 2-year note, buy Bitcoin. Sort of kidding. I'm sort of kidding, but as you know.
Let's be clear. Bitcoin should not be a dominant portion of any investor's portfolio, okay?
I guess can I just rewind for a second? So I like what you said, how Bitcoin is a technology, right? And there are let's separate that from the asset class. Has the SEC made a giant muddle, though, of this asset class? And how do we unmuddle it, right? If you could just start from now. I mean, what's okay, what's not? And I like what you said about, at this point, okay, then just have the spot Bitcoin ETF, because what are we doing here? but so many of the players, and in the way that Coinbase, I mean, how do you feel about Coinbase's whole approach where they're basically like, no, we're just going to come. You want to slap us with a Wells notice? We're just going to come out swinging. Okay. I mean, there's so many extraordinary things happening in this space.
Well, let's go with where it started, and has the SEC made a muddle of it. We had people take this technology and try to evade our time-tested securities laws.
Absolutely.
And our time-tested securities laws are incredibly rigorous, incredibly burdensome. To make a public offering in the United States, you have to go through many hurdles, much disclosure, you have to have audited financial statements. They wanted to evade all of that, okay? The SEC did a good job putting a stop to that.
ICOs, you cracked down on that.
ICOs, cracked down. Okay, and now the question is, there are things out there that are not securities. Bitcoin is one of them. Others, we talk about tickets. We talk about things that can trade in a market. We have to catch up on how we treat those in terms of secondary.
Look like? So that's why the Ripple ruling was so interesting.
Yeah.
You know, so what's going to be a commodity? What's going to be a security? Who's going to? Do you still feel like we have the right tools and are approaching this the right way? And
raising capital for a future product is a security. It's that simple, right? You come to me and you say, "Hey Jay, give me money. I'm going to go off and build a network. I'm going to go off and build a production. I'm going to go off and do these things, and you're going to get a return as a result." That's pretty clearly a security. But something that is for use today, time on a server, going to a play, that Bitcoin, now that it's completely decentralized, that is not a security. The lines, I think the lines are actually pretty clear.
So Coinbase is going to get in trouble not because they had Bitcoin, but because they had all of the other stuff.
Well, and one thing that is, I know this is, it's very tedious.
Technical, yeah,
it's very
technical.
But there's a big difference when people talk about crypto between raising capital, you coming to me and saying, give me money, and providing trading services. We treat the secondary trading of securities, commodities, and other things differently from a regulatory perspective than we do the initial distribution. The rigorous protections around initial distribution are what we focus on, but trading has a different set of rules.